Even before the pandemic, CEOs complained of a lack of oversight of their company's assets and projects and R&D. When the pandemic came, tough decisions had to be made quickly, putting pressure on portfolio management systems everywhere. At the same time, the post-pandemic world opens up new opportunities. But of course, the pace of recovery will vary across sectors and also vary across different projects in your portfolio. And so for this reason, it's a good time to be looking at portfolio management and the challenges and systems that are present within it. So that's the theme of today's discussion. Very shortly, I'll be handing over to Bob Laidler, who will be making a presentation on portfolio management, some of the challenges and systems that are available to us. Good afternoon, everyone. My name is Angus Warren. I'm the MD at WBC. We help companies to build business capabilities in their staff for better performance, and we help individuals improve their career prospects. And we do this through a series of online and classroom-based leadership and management development training courses. I'm delighted to introduce Bob Laidler to you, today's speaker. Bob is a partner at WBC and also course director for our project governance course. Over the last few years, he has been helping companies with portfolio management challenges. Most of his career has been in oil and gas, where he managed development teams in the Middle East and Australia, and also worked with IHS in London, supporting numerous companies on project governance, portfolio management, and A&D issues. I'll hand over to Bob very shortly. Just a couple of points of administration for you. Firstly, timings. Bob's presentation will be about 40 minutes long. We'll then have time for questions and answers, and so we will be finished by 2 o'clock London time, about an hour. And secondly, we will be sending out the slides to this presentation after the webinar is concluded. So look out for an email from us with the slides attached. Okay, that's it. Without further ado, over to you, Bob.
Okay, thank you, Angus. Good afternoon, everybody. So, portfolio management in the post-pandemic world. Portfolio management is a huge topic, and there's been many systems, tools, approaches developed and used over the years with varying success. And obviously in 40 minutes, we can only touch on some of the key themes. So we're going to focus on the key challenges and requirements for a successful portfolio management system in the future. Now, I've got 13 slides, and each slide will have a different theme or focus. And there will be a takeaway on each slide, which I will actually spell out in red on the bottom of each slide. Now, to actually work this, starting simply, I've come up with a fictional case, a fictional business case, which is a hospital. And we'll look at the development of that. But because I'm from the oil and gas industry, and I know many of you are, I've actually interspersed this with some examples from the oil and gas sector. So without further ado, let's take a look at our simple fictional case, which is a hospital on an island far, far away. Now, all of the life-changing operations for the whole island are undertaken in this hospital, and the surgeons have to sit down with the patient to make a decision as to what is going to be done to save the patient's life. Now, before I move on, just pointing out that the hospital is representing the company. The surgeon represents the project manager, and the project is represented by the operation or procedure that the patient is going to have. And in fact, obviously, the patient is the key shareholder or stakeholder in this. Now, there will be other stakeholders. There'll be the friends and family of the patient, for example, and also the hospital administration. And we'll look at stakeholders a little later on. Now, what would be the decision that, and what would be the data that the patient would want to see to make the decision? But first off, what's going to be the upside and downside of the major operation? Now, clearly, it's going to hopefully be that he will actually achieve full health, but the potential downside might be, in the worst case, death. Let's assume that there's some alternatives offered. One is some kind of limited procedure, maybe a keyhole surgery, and that you would get nearly full recovery of health, but the downside is significantly less. And another alternative could be that there's no operational procedure at all, and that he's simply given a wheelchair or a prosthetic or whatever. In other words, the downside is not very much at all, but he clearly won't be getting the same quality of life as if he'd had the operation. Now, if it was me, I would actually want to be provided with a full range of alternatives and to understand the upsides and downsides of each and the trade-offs of each. And that is basically the essence of good decision making. So the takeaway on this slide is that decision makers should be provided with a full range of options and to clearly understand the trade-offs. Now, there's not just one patient, there's hundreds of patients, and they're all in various stages of need for treatment. And if you take each of these grey circles as being the project, you might say, or in this case, it's the patient, clearly the hospital and the surgeons are going to have to do some kind of screening to see who needs to be done first and who can have or have to wait for weeks or maybe even months. And they would do that by applying certain criteria. Now, let's say this would be the criticality of the or the urgency of the operation, and whether or not the patient has a pre-existing condition. In which case, say maybe the red people, the red projects are the ones that need to be done first. But if they apply another screening criteria, it may be that a bunch of other people need to be done first. And possibly they decide that actually the red-blue, the ones that meet all of those criteria, need to be brought to the front of the queue. So that's a way of screening and ranking this waiting list of patients. So if we put that into some kind of pipeline and finish off the pipeline, we've got the prioritized waiting list, and then going into the operating theatres, coming out of the operating theatre in green, which is that they are well, and then going into the recovery wards before being let home. Now, that is just a snapshot in time, that screening. But of course, things change all the time. People's health changes all the time. So there's a need to monitor and track that change. And if we look at that over time, you can see the project, some of the patients their health is deteriorating in yellow here. So somebody has just been through the theatre actually is taking a turn for the worst, as is somebody in the recovery wards. And if we go a bit further on time, hey presto, the person that's in the recovery wards is actually taking it's become better again. Meanwhile, the person that's just come out of the theatres has definitely become very poorly indeed, and just taking it a bit further. Obviously, all the people that have gone red will now need to be prioritised faster. So the point of this is that monitoring and tracking of the patient health at every stage, not just in the waiting patients, enables rapid and effective patient and portfolio decisions. And the takeaway from this, of course, is that flexibility, clarity, and visualization of analysis and the ability to track and record change is a very important part of portfolio management systems. I mentioned about having a look at the oil and gas sector. And this is an example from the E&P sector. And what this is showing is a nominal pipeline of, on the left is a bunch of assets or exploration assets, you might say, one project under construction, a whole bunch of operating assets here, and then a couple of projects over here that are under decommissioning. And in this particular pipeline, there's 5 separate criteria that could be applied. So you could have the X and Y criteria, the bubble size could be another, the color of the bubble, and then even the order of the bubble color being yet another criteria. And that could be representing quantifiable or qualitative criteria, be it reserves and contingent resources and sweet and sour, onshore, offshore, whatever. There's a myriad of criteria in the oil and gas world to be used. So one note to put here is that the portfolio management system really should be looking at cradle to grave, and therefore including things like the actual operating assets, not just projects under development. And hence the criteria for that, i.e. the operational criteria for those assets, would be part of the screening criteria. Another important aspect of portfolio management systems is the ability to screen and rank per stage. So if you applied some kind of risk-reward criteria to the operating asset thing here, you can actually then sort of do the relevant screening depending on criteria used. But you would also want to be able to apply that to the entire pipeline. So for example, you might want to be considering whether or not to decommission early one of the operating assets and bring on a much more viable exploration target. So another takeaway from this is that effective overview and analysis at each stage, as well as the total portfolio, is a very, very useful attribute to such systems. Keeping on with the screening criteria a little, another vital aspect is to be able to see multiple screens and multiple criteria at the same time, and to be able to track changes across it is the best way of actually seeing trends. So in this particular example, you've got one chart which has got economic risk and commercial risk. And obviously the high risk at either end would be the deep red, and the green would be the low risk on both sides. And then look at 2 other screens to bring in additional criteria of operational and political and technical risk. And then the bottom x-axis here is in fact the 5 criteria all combined. Now this is showing a very, very simple partial example of US shale and Syria. Now, back 16, 17 years ago, US shale was very difficult to develop. And so technically it was very difficult to, therefore it's high risk, as you see here. But politically, it's good to work in America, it's very low risk. Meanwhile, Syria was always, and is continuing to be, quite a risky place, therefore higher political risk. But over the 16 years, if you track the change, obviously the US shale has become eminently durable, so therefore the technical risk has actually reduced enormously. And meanwhile, the regional strife in Syria has made it politically far, far more risky. Now, these are only two dots out of the multiple assets there. And of course, they would be all changing on all 3 charts or more. And it's only by seeing all of the changes on all the charts and actually being able to visualize it, i.e. the arrow going through or something like that, will you be able to really see the trend. So the takeaway from that is tracking change across multiple charts and criteria enables trends to be clearly visualized, aiding analysis and forward planning decision-making. Back to our hospital example. Oh, sorry, just finishing off on the oil and gas example. the decision makers will be needing some kind of overview of the entire corporation. And this is a simple, what's often called an executive dashboard. And what you see here is the pipeline that we just looked at, really, with for exploration assets through to decommissioning, and then a number of other screens. One of these screening criteria, scatter charts, a couple of time series. This one's production, and this one's reserves, remaining reserves, where the assets are around the world. And a point here is that this particular executive dashboard can be sliced and diced to see a myriad of different things. It's been, at the moment, just simply showing geopolitical regions or maybe business units. And presumably you could actually slice and dice it for offshore, onshore, oil, gas, sweet, sour, and you name it. So the takeaway from this, in addition, this is only the highest level. Decision makers would need to be able to drill down to the relevant level of detail to be able to make project and portfolio decisions, of course. So the ability to drill down on any asset or group of assets, etc., another very useful feature. So the takeaway, decision makers require a clear overview, whilst retaining the ability to drill down into detail if required. Now, back to the hospital example, patient decisions are not made in isolation. The hospital is well resourced. It's got plenty of wards, plenty of nurses, etc. It's also got an R&D, a research and development wing, which is well funded from the government and supported by charities and private sector. And we'll come on to that shortly. But it's unfortunately a little constrained in that it's only got 2 operating theatres and 4 surgeons. And in fact, you can't rely on those surgeons completely because one of them's thinking of starting a family and the other's prone to illness. And the point of all of this is that all of that resource actually has an impact on the patient pipeline. And in fact, it will actually cause a bottleneck so that the previous unrestrained pipeline becomes what's a more typical funnel shape, where the bottleneck is clearly the operating theatres. The takeaway from this is twofold. One is that oversight and management of key resources are a vital component, a fundamental component of the portfolio management system. And the other is that project decisions must be made in the context of the overall portfolio. I mentioned that the hospital had a research and development wing, and this is funded by cash, intellectual property, and in-kind contributions from a mix of universities and various charities, etc. And by in-kind, by the way, in-kind is where the universities provide their labs or their technical expertise and people in lieu of cash. And then obviously, if any of the research is successful, the various stakeholders will get a share in the intellectual property that is generated from that. Now, the R&D sector is focused on 3 major projects to either reduce the risks or improve the outcome of the options being offered to the patients. What I'm about to show you is absolutely typical of the R&D sector that I've been involved with quite a lot in various places in the world, which is that there's an initial estimate of how much resource, be it cash, personnel, IP, in-kind, etc., is required, and some kind of estimate as to what's going to be the likely outcome. Sometimes there's a real effort to try and come up with what's the forecast impact value of the project if it were to succeed. In other words, the impact on society, or in this case, the impact on the patient's outcome. But not always. Now, what you see here is the project one actually requires the least resource, but also has the lowest forecast impact value, or ROI being return on investment. And project three has, and two are fairly big, but project three requires the biggest amount of resource. One of the other problems in the R&D world is that it's often the lack of tracking of the forecast impact value and resource required. Now, if you actually do track it over time, you often find that things change over time. It's only a forecast impact value, but over time it may increase or decrease depending on success. And it's maybe you will get a budget review every year, maybe at a certain point, for example, here, where the project two, some bright spark is coming up with a new theme, a new idea, and it's agreed that maybe that should be form a separate project and have a separate team running after it. And what you're seeing here is that project one, the forecast impact value is increasing, whilst the amount of resource required is staying about the same. Whilst project three, the impact value is reducing, but the amount of resource is increasing. Now, if you track this over time, you may see something like this, where the project three forecast impact value is reducing significantly, but it's using ever more resource. Meanwhile, this Bright Sparks project 2A is actually becoming even more valuable, but requiring less and less resource. Now, as I say, it's very typical that this is not tracked. Problem is that if you don't track it, you're not necessarily utilizing the resource to the optimal. And of course, resources tend to be constrained. So if it was you and you had to make some tough decisions about where best to use your resource, what would you choose? So the takeaway from this is ensuring effective use of resources is a vital part of demonstrating value for money. And I say that again, value for money, because going forward in the post-pandemic world, that is going to be a big factor. It's not just getting value for money, but demonstrating to stakeholders that you are achieving value for money. So anticipating change. We've looked at the opportunities that the R&D programs have on the hospital and the patients. We've mentioned about the constraints on the pipeline, and I'm quite sure that you can all come up with a whole load of other opportunities and uncertainties going forward in the future. Point of this is that all of these opportunities and constraints have an impact on the pipeline. The challenge in portfolio management systems is actually how to incorporate all of that and to visualize that. And it's often done in two ways. Sensitivities being take one of those uncertainties, do plus or minus 5%, 10, 15, 20% on it, and see what happens. And then a forecast what if scenario, in other words, take one of the constraints and one of the opportunities and do a realistic look ahead. Maybe one of the operating theatres goes out for 6 months, one of the R&D programs comes in the next 6 months, and then one of the surgeons goes off to have a family in a year's time, is considered to be a realistic scenario. Now, I'm not going to work that as an example, but clearly that would either speed up the portfolio or increase the bottleneck or whatever. But the takeaway is that preparation for uncertainty ensures better and more robust decisions and hence more effective action because you're prepared for it. You may be able to put some mitigating factors in. It demonstrates effective oversight and also aids the strategy development and implementation. Now, remembering that each of these takeaways all adds up to what one would expect to see or hope to see in an effective portfolio management system in the future. So I'm going to do a little bit of a summary of what we've seen so far. I mentioned about the value of having an oversight of today, the executive dashboard, and then the ability to drill down, etc. And we've also had a quick look at the look ahead, be it sensitivities or forecasts, what if scenarios. But many companies in the oil and gas world and so on actually also try and bring in lessons learned from the past. And that could be what went well and can we try and recreate it? Or what went badly, can we avoid it? The problem is that looking back from today, of course, it's always E&D in hindsight, but you're looking back through today's lenses. So you're looking back with the current focus on ESG, environmental, societal, and governance, is a big focus, etc. Whereas 15, 20 years ago, decisions were being made without such a focus. So you have to really be able to look back at the decisions being made and the data supporting each of those decisions as it was at that point. In other words, in the context of that time. So the takeaway from that is that decisions must be considered within the context and time frame in which they are made. And achieving this in portfolio management systems is a little bit of a challenge. Moving on, we looked at an R&D pipeline, or 3 projects going through the R&D wing, and we looked at the patient pipeline. Now, clearly the two are very interrelated, because the success of any of those R&D pipeline things at any one point will have a significant impact on the patient pipeline. The ability to see the 2 pipelines on the same page and then to explore the interaction of the R&D pipeline on the patient pipeline, be it in sensitivities or what-if scenarios, is an invaluable thing. And the takeaway is an overview of multiple pipelines and the interaction between them aids effective scenario analysis, resource utilization, and strategy development. Now, I'll take this and look at the oil and gas world. And what you're seeing here is representing an oil and gas major that's really relatively representative today, is where they're actually moving to becoming energy companies. In other words, it's got some an upstream pipeline, a downstream pipeline, and also it's moving into renewables, in this case, solar and wind. And for various reasons, it actually wants to consider a couple of target companies to take over. One which is actually a pure exploration and production major, and another which actually has some significant renewable projects as well. Now, the value of being able to see all of the 3 pipelines on one page and to explore the interactions between them is that, in this particular example, is that the company can then superimpose the target company's portfolio on their own. And by using their screening criteria, their risk criteria, etc., they can then see how the target company's portfolio fits with their own. And as a result of doing all of that analysis, it may be that they actually come up with, yes, it's worthwhile taking one of the target companies or even both. Maybe that they can then decide to divest one or some of the assets of the target company or even of their own. You've got all of that capability, but you need to be able to see it all on a consistent manner, a consistent set of your own criteria, and also all on the same page. Now, this is just a high level, obviously a bit of a drill down, and this is just a little example of seeing the portfolio and then superimpose the target portfolios on the upstream, downstream, and alternatives. And obviously a lot more drill down to per asset as well. The takeaway from this is that the ability to clearly compare different pipelines enables more robust strategies to be defined. So I started off by saying it's a huge topic. We are running out of time in some respects, so I'm going to cover this penultimate slide with 4 different items. First is stakeholder management, which is looking to demonstrate to the stakeholders that you've got effective oversight and that you're addressing their concerns. By doing so, you can build up trust and get their confidence. And if you're doing it in a timely way, you can actually get them to buy into decisions. Now, I'll give you a couple of examples of something here. First is on the patient with the hospital analogy. The patient has friends and family, and they're obviously going to be obviously very interested in his health and well-being. And the surgeon will be looking to give some information to the family. Now, it's not going to be as much as he will be sharing with the patient because of confidentiality, and he's going to be given even less to the family, to the friends. But he will then adjust what he says to be relevant to the stakeholder. So relevance of what he presents and confidentiality are 2 aspects there. In the oil and gas world, we've seen where if you provide timely information to the relevant government regulatory authorities and the NGOs focused on the environment and so on and so on, you can actually get them to buy into the decisions in a timely manner. And if you don't, the consequences are that the project often gets delayed by months and years, and this is fairly typical. So an effective stakeholder management system is vital. Now, in the oil and gas world, a lot of the information for the stakeholders is actually in the portfolio management system. And it should be, if it's set up well, fairly easy to provide the relevant information to the stakeholders, to each individual stakeholders, and only the relevant part, not the confidential part, in a timely fashion. Unfortunately, what often happens is there's an inordinate amount of time spent by people gathering information to make ad hoc reports to stakeholders. The world is becoming an increasingly dynamic place. People are looking to input data onto their iPads and their iPhones whilst they're on the run. And they're not sitting at the computer as they used to. And then not only that, they're expecting to be able to see the analysis in clear graphical form on their iPads and their iPhones. So an increasingly dynamic place in that respect, but also the increasing computing power enables us now to actually make all that portfolio decision and analysis of corporate resources, etc., very quickly. So it becomes very realistic to make portfolio decisions in the context of the, project decisions in the context of the portfolio whenever a project decision is required, and for a regular review of the portfolio and the corporates that you're using, the corporate's resources effectively, rather than a review every year, made to be just prior to the shareholder meeting or every 6 months or whatever. And then 2 other points is that you've got a myriad of databases and spreadsheets, and you've probably got people working on different offices, maybe around the world, etc. So one of the challenges is, how do you ensure that everybody is using the most up-to-date data, the most up-to-date spreadsheets, etc. In other words, how do you ensure that they're using a single version of the truth? And then tied with that, of course, is how do you ensure security of all of that data, both internally and externally? So a lot of demand there, and this has been around for a while, but it's increasing. So complex versus complicated. Complicated is where you have a known output and a fairly known input and a certain way of doing things in between, getting A to B. In other words, a good example of this would be the internal workings of a watch. So the output is a watch that tells time. You've got a complicated set of mechanisms going into it, as it were, and they have to go together in a certain way for the watch to work. So it's all fixed. A car engine would be another example. Complex is where you've got uncertainty of the outcome, you've got uncertainty of what's going in, and you've got a whole variety of different ways of getting from A to B. And the current pandemic is a classic case of that. Let's say starting back in 2020, nobody really knew what they were dealing with, what was going to be the outcomes, or how to deal with it. And so you've actually had over the last year and a half a myriad of different governments making different decisions with more or less success, and it's still going on. So that is classic complex environment. Why do I mention that? Because going forward, of course, we're going into a world which has got increasing geopolitical tensions, increasing focus on the environment and societal issues, increasing change of technology, energy transitions, you name it, everything. So where are we going to end up? But also how to get there could be variable. And it's going to be those companies and governments which look at things differently, analyze things differently, do things differently, that are actually going to really fully realize the business opportunities and best succeed. Now, portfolio management systems that I've seen have tended to be operating more in the complicated environment, and then with an adjustment, an add-on module or whatever, if somebody wants to make a change. There's been a growing realization by companies that they're actually working in a complex environment and that they need the tools to actually operate in that. In other words, adaptability at every stage of the game. Finally, governance. Project governance, everybody knows about, and I won't go into that. Corporate governance, everybody would have heard about, and really seems to be more about tax audits, ensuring the company isn't misappropriating the money. But I've not really seen very much in the way of a focus on portfolio governance. In other words, ensure the company ensuring that it's using its resources effectively as possible at all times, and that it's achieving the best of its entire portfolio of assets. Not only achieving it and doing it, but also demonstrating to its stakeholders that it's doing it. And the other part of that would be obviously ensuring a strategic plan is in place, being effectively implemented. And ultimately, and I've ended up with this, is that the company is getting value for money out of all of its resources and so on, and demonstrating that it is. Now, portfolio management systems are, if done properly, ideally placed to providing that demonstration and helping on the portfolio governance. So that wraps me up on this with one simple question, and that is, from all that you've seen and heard today, how ready is your portfolio management system for the post-pandemic world? So thank you for listening. I'm going to now pass you back to Angus, who will then facilitate the question and answers. So over to you, Angus.
Thank you, Bob. Thank you very much. Yes, as Bob said, we have an opportunity for questions and answers now, and I would suggest that if you do have a question, I hope you do, and would encourage you to ask any question that you have, please go to the chat function. You will find chat in your toolbar, which is usually at the bottom of Zoom. You might need to move your cursor down to the bottom of the screen. you'll find the chat function there, and you can simply click on that, and a new box will come up, and you'll be able to type in a message or a question or a comment. So we'd love to hear what your thoughts are on this, and particularly any thoughts on Bob's last question about being ready, having a portfolio management system that's fit for purpose for the world that we live in. So that's the chat function. Go to your toolbar, click on chat, and type in any questions or comments that you might have. While you're thinking about that and getting ready to ask your questions, perhaps Bob, I can start us all off. You mentioned stakeholder management a few times in the presentation there, and the interface, the link between stakeholder management and portfolio management. Any further thoughts on that, on some of the things to look out for?
Yes, one thing I will mention is that I've actually seen this, but particularly in the R&D world, of the use of CRMs, client relationship management systems, as stakeholder management. And it was almost like people thinking, well, CRM is a stakeholder management. Yes, it is, but it's really focused on sales, or typically they're focused on sales. It's not quite the same as the stakeholder management that I'm talking about, which is where, for example, in the R&D world, you want the universities want to be able to see that their resources, their in-kind stuff is being used effectively all the way through, how it's being used in the context of the various programs, and that they're getting their share of the IP out of it. That's not really what CRMs are about. So that's one comment, as it were. Does that help?
Yeah, definitely. And I notice also that we've got a couple of questions come in, so I'm going to jump straight over there. A question from thank you for that, how do you compare and contrast projects when your knowledge of each is not equal? How do you normalize to assess the position of a project vis-a-vis your criteria set?
Interesting. That is an interesting one, and I'm not sure I can answer that fully correctly now. But what's going to my mind is that there's the use of efficient frontiers, where people actually are comparing a whole bunch of different options and coming up with what they consider to be efficient frontier. The problem with that is that it came originally, I believe, from the financial world, where all of the instruments that you were looking at could be traded and dealt with on the same day. So it was all within the same time frame. It's a bit difficult to use efficient frontiers in the oil and gas sector when you've got projects that may be taking 8 to 10 years to come along, and trying to compare them with assets that are in operation. And so I mean, bringing in the fact the difference of timeline being very difficult to compare like with like, which really, I guess, is the essence of the question. I'd have to think about that. So let me come back to you on that in writing sometime after this.
Brilliant. Yeah, I think there's always this thing about deterministic versus stochastic modeling. And when we say we have different knowledge levels on projects or opportunities, what we're really saying there is that there's different uncertainties in each. So the band of uncertainty might be greater for projects or opportunities where we have less knowledge.
Yeah.
And so how do you model that? And what you're saying is that there are some things we can do around stochastic modeling, simulation, where we can build in some of this uncertainty.
Indeed, and in fact, one of the issues with optimizing a portfolio would be that if you did a stochastic model around each of the operating assets, there will be a range of upside and downside. but each of the assets, each of the projects will have an upside and downside, but they will be different. And when you go to optimize the entire portfolio, you can't just work on the optimizing the mean. You've actually got to be able to look at the upside and downside of each and be able to make some trade-offs between each. So if you drop off one asset, you might be dropping out a big upside or potential upside. It's only potential.
Yeah, it's an interesting one, isn't it? Because it's firstly, it's a very dynamic situation because we're getting knowledge all the time, and we invest money and time to improve our knowledge. So that this whole idea of value of information, and so it's a very dynamic situation that we face.
And that's one of the reasons why it's quite difficult to really apply to optimize with algorithms across the entire portfolio when you've got a big long time-based thing and an upside and downsides on each. Some people do it, but it's a very company-specific thing, because really what the decision makers want and need to see is, in fact, the first slide that we had is that the decision makers need to see all of the options and to understand the upsides and downsides and explore the trade-offs between them. So,
okay, I'll move on to the next question, which speaks a little bit about the software that's available for project portfolio management systems. Which, as an aside, perhaps Bob, you might let us know your thoughts on which software is out there and what you're using. But the question is, Bob, that was excellent, thank you. Can you please recommend a portfolio management system that requires not just the purchase of the software, but the offer or requirement to become a certified practitioner of the system? Any thoughts on that?
Well, I'm not an expert. There's a lot of portfolio management systems, as we said right at the beginning, that have been developed over the years. Some are very much kept within the company, and then there's some service providers, etc. I'm not an expert at them all. I have seen, though, that they tend to be really quite big beasts. Enterprise relationship management, ERM type things is often a term used. But they do tend to be operating in that complicated environment rather than being adaptable at every stage to be best used for the complex environment. So in terms of recommended, well, I've only actually seen one provider that's actually really focused on working in the complex environment and also trying to achieve all that I've mentioned there, you know, the governance, the stakeholder management, the resource management and everything else. And that's a small company down in Australia. And the thing there is that they actually set out to achieve that by building the thing from the bottom up in the complex environment with extreme adaptability. Whether or not there's any other providers out there that can do all of that, I don't know, but I believe that they tend to be more complicated environment and then add-on modules, which tend to be quite expensive in order just to add on an extra capability or whatever.
Okay, so this idea of complex versus complicated again in the context of portfolio management systems and the tools that we use. If you have would like any further information on this, by the way, please just ping me an email and I'll introduce you to Bob, or I'll make sure that any further detail you need is addressed. Sure. A couple of comments, Bob, quickly. Hi, Bob and Angus. I have a comment, not a question really. I found the presentation interesting, even though it was tailored more to portfolios in the oil and gas sector. I work in the financial sector and still find some of the basic tenets explained here to apply. Thank you, which is great. Yes, we're very much talking about physical assets today rather than financial ones, but obviously there is some overlap there. David, thank you for the comment. The pandemic setting of this presentation is very relevant. I recently saw a presentation from Pfizer, which had windows covering different aspects of the vaccine development project, from basic R&D to bottle and needle production. Windows were being updated almost hourly, so amazing dynamic representation of your portfolio at Pfizer. Okay, I don't see any other questions. If you do have a question, we'd be delighted to address it. So there is still time to ask a question using the chat function. I think perhaps looking at the time, it's 10 minutes to 2. So if it's okay for you, Bob, I'll ask you one more question.
Sure.
We'll do a final check on the chat box, and then we'll draw it to a close. So I mean, I think it was interesting, the discussion we've had with the questions today, and particularly around the complex, complicated, the uncertain world, the amount of change that's going on, and the different tools that we have. And obviously, you know, this can get very, very tricky quite quickly, and we need help from, and you touched on this, on from technology available to help us to optimize. Any further thoughts on the technology side, artificial intelligence, and anything else out there that you see that is up and coming in this area?
Yeah, so we touched on that in the answer to one of the questions, which was the use of optimization tools and the difficulty, because in a way you don't want to make decisions black boxy. The decision makers actually really want to be able to explore the options and the trade-offs, etc., and see it. But obviously, in addition to that, you need sufficient clarity that it doesn't get lost. You need to be able to see the wood for the trees. However, I can see optimization and AI being used at certain increments of it. So, for example, in the patient screening, the waiting patient screening, it could be that there was some kind of AI there, and every time you came along with a new criteria based AI, I don't know, a new pre-existing condition or whatever, you simply plug that in and it reordered everything. So there'd be certain parts where AI and optimizing algorithms could be more effectively used than others. So I have seen where companies have tried to go and optimize an entire oil and gas portfolio, and you would have a probabilistic view, which is including all the upside and downside of each particular asset from each stage, be it the operation, the things through to the exploration, and so on and so on. That gets very tricky, as I said, because you really need to be able to see the upsides and the downsides of each particular asset and explore the trade-offs. And so whether or not you build in AI or optimizing algorithms across entire portfolios tends to be very much a very specific company request, and you build it accordingly. Right, okay. So AI applying, I think, more to specific parts of the screening or whatever.
Yeah. A quick comment from James with a question, and perhaps we'll finish on this one. I don't see any others. I ask about the certified practitioner as I work as an assessor of funding applications. The bigger the dollars required, the more the assurance, the funder requires of the portfolio of assets involved in the project. Can
I come back on that after the thing? Well, yes, I forgot to answer that particular question. I wasn't being a politician and slipping it at all.
No. And I think the other part to James' question is, what's the Australian company's name for the portfolio management system? So I can write to you, James, or you can talk about that now, Bob, whatever.
I'll get back afterwards, if you like, and drop James a particular note then.
No problem. We'll do that. We'll do that, James. So look out for that. Okay, I think we'll finish there. We've got a little bit of admin to do, and then we'll be at the top of the hour. So first of all, I would like to thank Bob for a very thought-provoking presentation and interesting presentation. Thank you for taking time out to speak with us today, Bob. We really appreciate it.
No, it's a pleasure.
And I can tell with the questions that were asked that this is resonating with folks. Let's move on to the last slide, and we'll close out this. Okay. Just to finish off and let you know about upcoming courses, you might know that we have a series of online workshops which are short duration learning interventions delivered online, of course, typically over about 3 hours in multiple sessions, bite-sized learning interventions where we replicate the classroom environment. So they're very, very interactive. And I mention these specifically here because we do have one on stakeholder management, if you'd like to find out a bit more about that. I just wanted to highlight also that Bob's project governance courses are coming up this year. You can see the dates that we have in the calendar for that, including online in June, Jakarta in September, and Lagos in November. And of course, with all our classroom and online courses, we can arrange them in-house if you would prefer. And just a request, please, for those that are interested in further developing their skills and knowledge in the area of portfolio management, we are thinking of designing and developing a new online workshop in the area, or perhaps a new training course, a 3-day training course. We'd love to hear from you if this might help you with learning needs that you have. We're a little uncertain as to what the demand might be in the marketplace. So if you have any thoughts on that, and in particular any requirements that you have in this area, please do get in touch. We'd really appreciate it. Okay, and lastly, the next webinar we have coming up is next month. It's on corporate social responsibility. That will take place on Tuesday, the 18th of May at 1 o'clock London time. I hope you can make that. Okay, well, we've come to the end. That's it for today's webinar. Thank you very much for attending the webinar and participating. We've enjoyed having your company. I hope it was useful and rewarding for you, and we look forward to seeing you at an future event. Thank you and goodbye.
Thank you. Bye-bye.
Bye.
See you.
Bye.
See you.